the topic of my essay is accounting and technology. The first part of the presentation talks about how accounting has changed over time with technology, and the second part talks about the emerging trends and their impact on the accounting profession and the accountants. My paper talks about the integration between the field of accounting and technology, history of accounting, emergence of CPAs and the auditors, technology and accounting history, recent accounting and relationship management software, technological tools and equipments that impact the accountants and our accounting profession, and I'm going to briefly talk about the negative effects and the positive effects, and then I'm going to conclude my presentation with my recommendation. History of accounting profession. Double entry bookkeeping system was introduced in 1494. The concept was devised by Venetian merchants. The Industrial Revolution and creation of corporations and multinational firms stipulated the need for advanced cost accounting and bookkeeping methods. Emergence of CPAs and auditors. During World War II, accountants were required to keep track of records and act as auditors. The concept of certified public accountants emerged in 1896. The CPA firms provided several partners to Washington war machine that ensured victory and led to innovations in the accounting and auditing profession. The events during World War II led to the need for more accountants to account for the money that was being earned and spent. The need arose to conduct audits of the defense contracts. More revenue was needed because expenditures increased, and so more taxes were imposed and collected. Technology and accounting history. Earliest use of an adding machine, the wire, and bead abacus was 2,000 years ago. In 1980, Herman Hollerith invented punch card and computing technology. Thereafter, mechanization of tax assessments and collections took place. Electrical operation of cash files took place. The application and use of machines and electronics in accounting took place. The need to increase speed, the demand for accurate results, and time constraints are the factors contributing to mechanization of tax assessments and collections. This has prevented under and overassessment of the property valuations and favoritism, which in turn prevented unrest and dissatisfaction on the part of the taxpayers, as the Journal of Accountancy suggested. Before the advent of electrical operation of cash files, CPAs were manually filing, sorting, and retrieving data in 1940s. In October 1955, Kermit realized that it was about time that CPAs started using computers developed for scientific and mathematical calculations for their own use. Accounting and relationship management software. Cloud computing software for bookkeeping, accounting software such as Peachtree, QuickBooks, Sage 50, etc. Audit software such as CAT, Blue Chip Standards, MS Office, Enterprise Resource Planning software, Supply Chain Management software, Customer Relationship Management software. These are the few software. ERP software has special accounting module that helps all the people in the accounting department to collaborate and efficiently communicate, for instance. CRM system help accountants in speeding up the proposal process to the customers. Areas impacted by technology. Accounting regulations impacted by technology. This includes move from GAAP to IFRS, labor laws, equity-based crowdfunding, accounting for assets, accounting for liabilities, example, capital and operational leases, green accounting. All areas starting from collection of assets, from collection of data, recording, processing, and reporting have been affected. Advent of technology has turned the world into a global village. A move from GAAP to IFRS as companies expand overseas. Due to emergence of multinational firms, the world is developing into a gig economy, which is a concept generated due to a move from full-time permanent workers to part-time, contract-based, and freelance workers. The existence of technological tools such as internet, video conferencing, virtual networks has contributed to being of gig economies. Equity-based crowdfunding has encouraged overseas expansion of firms. Equity-based crowdfunding allows unlisted private companies to raise funds through offering shares online and still form a part of the capital market. This leads to new reporting and compliance issues, which will require new accounting regulations. As sharing economies become more prevalent, there will be a change in the status of ownership and control, which in turn will require modification to the laws pertaining to assets and liabilities. As the world is becoming aware of the need to protecting the environment, the concept of green accounting has emerged, which has led to the need to devise standards and regulations to perform green accounting. Carbon unit measurement and management tools have been invented. Green accounting software are needed to calculate carbon ratings for the products retailers stock, and carbon accounting programs to calculate the tax based on the amount of energy company consumes.